Okay, traders, you're all welcome to my screen view. So here is I'm gonna show you the anatomy of a pin bar. There's a price action signal which you can use to trade, on the bagging a lot of profits in the market. This is a very powerful trading signal bar. This is strategy signal bar which you can use, to bargain a lot of profits. That is if you implement it the right way. So I'm gonna walk you through everything you need to know about this pin bar. So right here on my presentation right here, we got the anatomy of a pin bar. So I'm gonna discuss about the nose, about the body, about the tail. So as you can see right here on my screen, I got the pin bar. Here is a bullish pin bar, and then here is a bearish or pin bar. So I'm gonna tag this right here. There's the okay, so let's quickly tag this bar right here. So I got a one on the left hand side as the bullish pin bar. So it's a bullish pin bar. It's a bullish pin bar. Okay, so there's a bullish pin bar. So whenever you figure out this on the chart, you should know it's a bullish pin bar. So it's a very, very powerful signal bar you need to understand. Okay, and then the one on the left hand side is the bearish pin bar. So this is the bearish pin bar we got right here, the bearish pin bar. I got a bearish pin bar right here. So there's it right here. So now I'm gonna label this price action bar. So then let's get in right here to some labeling right here. So at the top edge right here is the nose. Here's the nose. Okay, so this is the nose of the bar. Is the nose. Okay, so I got nose right here. So I'm gonna label the nose. Let's label the nose right here. I got a nose of the bar. So this is the nose. Okay, this is the nose, and then right here I got the head. Here comes the head. Okay, here comes the head of this bar. So let's get it right here. So here comes the head. So you need to understand properly the anatomy of this bar before we start trading it. Okay, and then this is the tail. This is the long tail. Here comes the tail. Okay, so there's a tail right here. I got a tail. So here is the tail, and then we got a neckline right here. Here's a neckline. So I got a neckline right here. So I got a neckline. Got a neckline. There's a neckline. Okay, so we got a neckline right here. Neckline. Okay, so this is the anatomy of the bullish pin bar. Same goes to the bearish pin bar right here. So I'm just gonna quickly mark all these parts right here. We got an edge right here. So we got their nose right here. We got their neck right here. We got a neck. Okay, so got a neck, we got a nose. Okay, so I'm gonna just get this right here. Okay, so let's get their labelings right here. So got the right here we got a tail. We got a tail, and then right here we got a neckline. So here's a neckline, and then right here we got their head. Here's the edge right here. This is the head. We got a head structured right here. Okay, so there's the head. Okay, there's a neckline right here. This is the head, and then here comes the nose. Here's the nose right here. Here's the nose. So this is the anatomy of a pin bar. This is a pin bar. So I'm glad you guys now understand the anatomy of the pin bar right now. Here is the nose. Here is the head. Here's the tail, and here's the neckline. Here's the tail, here's the neckline, and then here's the nose, here's the head. Okay, with that all set, so let's move to the next content we got right here. So here is a psychological analysis of a pin bar. So we need to understand the psychological analysis behind the pin bar before we start trading it. So to explain better the psychological analysis behind the pin bar, we need to discuss about the opening or level, the movement, and the closing. So let's get back on the picture right here. So right here, I'm gonna just wipe all this off right here since we know this anatomy right here. So this is the opening. So here is the bar, the pin bar once again. So I'm gonna show you guys the opening, the closing, and the price movement on this bar. So from this level structure right here, here is the opening of this bar. So let's quickly label this bar. This is the opening level. Okay, this is the opening level. You can see that. So let's quickly tag this right here. Okay, this is the opening of this bar. Here's the opening. So the neckline is the opening. Okay, so the neckline is the opening level. So I'm just gonna move this up a little bit. Okay, this is the opening. Good. So this is the opening of this bar. This is where the market opens on this bullish pin bar right here. The market opens at this level right here. Then price went downward to the extreme low right here. Okay, this is where the bears got into, or they put the price to at this level before the bulls went. The bull steps in right here aggressively, and then they reverse the actions of the bears. Here are the forces of the bears. The bears put price downward, and then the bulls comes in, steps in, and then reverse the trend upward, thereby getting to the opening right here and then ensuring a closing above. So here comes the closing of this bar. So I got the closing right here. Here is the closing. Okay, so let's label the closing right here. We got a closing of bar. So here's the closing of this bar right here. Okay, so the bear steps in to this level, the bull steps in, reverse the trend, get to the opening, and then went further and then have a closing of price at this level. So the action which we got right here, which is the nose, is also action within the bulls and the bears, but the bears won at this level right here. This is why we can figure out a nose right here. It simply means the bull steps in where they got to this level, they went further and put price to this high tip right here, but the bear steps in and put reverse price downward. So this is why we got a nose right here. But sometimes it's possible you might not figure out a nose. Sometimes it is possible you may not figure out have a nose. So if we do not have a nose, this is the kind of way you're going to figure out if you don't have a nose. So let's get this right here. If you don't have a nose, this is the way the bar is going to be on your chart. Okay, so if you don't have a nose, this is how this bar is going to look like. You can see that. So which means at this extreme level right here, the bulls close the market right here without the bears showing any sign of interest. So right here, the nose right here signifies the interest of the sellers. And the right here, okay, we are done with this right now. So let's try to move to the bearish pin bar right here. So here is the opening of this bar right here. Here is the opening. So here's the opening right here. The bulls step in, put price upward to this level. This is the action of the bulls. And the bear steps in, reversing the action of the bulls downward. The bears went in further to this extreme low right here. But what happened at this level? The bulls The best got in, put price to this level, but the boost steps in and rejected, reverse some of the movement of price to this level. So at this opening right here, the market closed at this level right here. So this is the closing. Okay, this is the closing right here. This is the price movement. This is the price movement of the pin bar right here. So this is the price movement of the pin bar. So the opening, the movement, and the closing. This is the psychological analysis of the pin bar. Okay, so next I'm gonna show you guys we need to discuss about the color of a pin bar. Does the color of the body matters? So I usually get a lot of questions when it comes to the color of a pin bar. Does it matter? No. So I'm gonna walk you through as well. So let's check maybe the color does matter. So here is the pin bar once again. So does the color of the pin bar matter? So I'm gonna replicate all the images we got right here with a different color. So for instance, if this is a red bar, and then we got a red bar right here. Okay, so we got this right here. Take note, there may be presence of nose or no nose at all, so it doesn't matter. So here is another pin bar. So I'm gonna replicate this one as well. So let's replicate there's and see what we got right here. Okay, good. I'm gonna replicate this. Remember, it's not compulsory, it must have a nose. Okay, so the question is this the right one, is this the wrong one, or is this the right one, or is this the wrong one? So the right answer is both are all correct. They are right. The color of the body does not matter. You can call this the body or the head. Okay, the body or the head. So the color of the body does not matter. Okay, it doesn't matter. So if you have maybe your chart, maybe you have the white color for the bullish bar, or maybe black for the bearish bar. Whenever you figure out it does not matter. Okay, the color does not matter. So let's walk to the next slide. So here comes the next slide, and the next slide says size of a pin bar. Does the size of a pin bar matters? Does the size of the total bar matters? Does it matter? So we gotta treat this question properly. It's a very important question, and this is where most beginners in the market get it wrong. Even some experienced long-term traders, traders who have been in this field for a long time, they do get it wrong sometimes. So in order to avoid taking the fake pin bars, you need to understand if the size of the bars matter. So let's check out the size. So here is the image of the pin bar. We got a bullish right here, we got a bearish pin bar right here. So I'm gonna quickly label this bar right here. We got a bearish. So let's move this. Okay, so does the size matter? So here comes the tactics. So according to the rules of a pin bar, it states for a pin bar to be considered as a reliable one, the tail, that's this tail right here to the neckline, there's a distance of this tail right here. The tail right here must be at least twice the total size of the range of the bar. Okay, this is the tail. From this level right here is the tail. We got a tail right here. This is the tail. This is the tail. Okay, and this is the range of the bar from the highest peak, highest movement of the high to the lowest swing low right here. So this is the range. While from this level right here we got a tail. The tail, this is the range. The range. Okay, this is the tail, this is the range. Okay, the lowest low right here is the range. To the lowest low right here is the range. This is the no highest swing high and the swing low of the total movement of price on the pin bar. So that is the range. So whenever you hear the word range, it means the total movement of distance, the total pips value, the total movement, price movement of a bar. So that is what is being called the range of a bar. So it's according to the rules of pin bar, it's does state the tail must be at least 2/3 of the total size of the pin bar, that is of the range of the bar. So for example, if we got from this range of the peak right here to this level right here, if we take the measurement of the pips value, if the value is 60 pips, it means the tail must be at least 40 pips, that is 2/3. For example, if this bar right here is 100 pips, that is the total range of bar. It means the tail must be at least what? Twice. The tail must be at least twice the size of the head. Okay? So, right here we got 2/3. You can simply multiply this by x. X simply represents the coefficient of the value of the tail. Do not get confused with the mathematical terms right here. What I mean is the value of the tail, the pips value of the tail, you simply multiply it by 2/3. Okay? If we got like our 60 pips of the total range of bar right here, you just multiply this by 60. That will be 3 divided by 60. That's going to be 20. 20 times 2, that would be 40 pips. Okay? So this is how you can calculate, find out if a pin bar is a reliable one. Because the reality is, when you open your chart, you're going to figure out a lot of bars on the chart, which most of them are not a reliable ones. So right here is a chart of the Australian dollar paired against the Japanese yen. I got a pin bar right here which is still going through process of transformation, but we cannot conclude yet this pin bar because it's a 4-hour bar and then it's 4 hours still active. So we can't yet classify this. Right here it's a pin bar. So if you take the measurement of this bar right here, from this neckline right here, you measure from the neckline to the tail right here, that is 14 pips. To the total range of the bar, that is 5 pips. So right here, the tail is at least more than the remaining sides of the head as well the nose. Okay? So this is a reliable pin bar. You can see it's a very small size pin bar. You can see this short bullish rally right here. So you can see this was a pin bar. It failed right here. Okay, this is a nice pin bar. This is the kind of pin bars you should look out for. Nice, well-structured pin bar. But not all the time when this pin bar forms the chart, it does not always suggest to buy. You see? Okay. Likewise, it does not suggest to sell. Okay. So in the next slide, I'm going to show you how you can, the nice zone to look out for this signal bar, the nice zone to implement them for trading or opportunity. Okay. So with that all said, so let's move to the next slide. And then next on our slide is the key level formation of a pin bar. So in this slide, we're going to discuss about the neckline formation, midline formation, the tip tail formation, and then the offline formation. So I got a whiteboard right here, got a chart right here, so I'm gonna put on a whiteboard. Okay, so on this whiteboard right here, I'm gonna discuss about the types of key level formations of a pin bar. So for instance, if we got a support structure right here, okay, this is support structure we got right here, and then we got a resistance structure right here. So our pin bar can occur in 4 different levels on the chart. So for example, we can have a key level structure which can occur like this. We call this type of neckline, and then we can have another key level structure which is gonna form like this. Okay, we have a pin bar like this, and then we can have another pin bar formation like this on the chart. Can have another one like this. Okay, have it like this, And then we can have another one like this. Okay, good. So right here is the support key level structure, support key level structure, support right here, support right here. We can see this bullish pin bar right here. The neckline is the key level structure right here, and we got this one right here as a midline. Okay, this is a midline. So the middle of this pin bar right here, that is the 50% Fibonacci level, is lying at the key level structure. And we got this right here, the tail is lying on the key level structure right there. And then we got this one, which the tail is offline. It's offline. You can tag this as an offline key level rejection. Okay, right there we can tag this as an online. It's on the line. Okay, where we got this one as a midpoint, we got this one as a neckline. So we can also have a pin bar from the resistance structure, that is a bearish pin bar. So we're gonna tag this right here at a bullish pin bar, bullish pin bar. So here is a bullish pin bar at the support. So the line we got right here, it's our support structure. This is our support structure. So we can as well get a pin bar at the resistance structure, whereby we get no price makes a reaction to this resistance structure. This is the resistance structure. Okay, so we can get we have this bar, then we have a bearish pin bar, and then we can have another one which is gonna look like this, midpoint. Okay, and then we can have another one which is gonna look like this. Okay, and we can have another one which is gonna look like this. So right here it's a neckline reaction, and right here is a midline reaction. Okay, and then right here it's an online reaction. You can call this as a protruding or tail. Okay, and the right here we can tag it as an offline bar reaction. Okay, so the question I want to ask you right there is, which of these pin bar is the most powerful? Which of this pin bar is the most powerful? Okay, so which of this pin bar? So right here you can see we have different types of pin bar right there. So the question now is, which of this pin bar is the most powerful? So to give the right answers to this question, we need to study the key level structure right here. So here are the key levels. Here is the key level structure, the support structure right here. So price reacted through the neckline formation right here. When the bear step in aggressively to this level, the bull step in and then reverse the trend upward, whereby the neckline rests on the support structure right there. Likewise, right here we got a midline right there, where the bear steps in, the bull pull price upward again. Thereby the midpoint, the 50% Fibonacci level of this bar reacted at the midpoint right here, based on the key level structure. Whereby right here we just have a rejection from the tail. We didn't have a rejection from the midpoint, likewise the neckline. And right here price is offline. So all these bars right here are nice, they are well defined pin bars formation, but due to my year of experience, the most powerful pin bar right there which I love to trade, which does have a lot of high winning records on my trading or record list, is the first which we got right here, which is the one which reacted at their at the neckline structure in relation to the key level structure, whereby the next stronger pin bar right there is the midpoint, whereby this one is strong and this one is a leg strong. So as a beginner in the market, if you want to trade a pin bar, I would advise you stick to the neckline reaction bars and then the midpoint reaction bars, and stay away from the online bars and the offline bars. Okay, so these are the bars right here you should look out for to trade in the market. So I am not saying all these bars right there are not right, but in trading you have to try to build up a valid, strong or signal. You have to try to build up a strong or valid confluence factors supporting your trading or decision. So it's advisable you stick to these bars which react in relation to the resistance structure and the support structure. Okay, so stick to this type of formation which we got right here and the one which we got right here. Okay, and then right here. So stay away from this kind of formation like we got right here and the one we got right here. Okay, they usually do not move much longer on the chart. So these are the 4 formations of price. That is the key level structures. The pin bar, the 4 ways in which the pin bars can form on your trading chart. So the next on our slide right here is trade anticipation of a pin bar. So there are 3 ways you can use the pin bars to trade. There are 3 ways. So we can use the pin bar as a reversal bar. So let's check some currency we got right here, which we got a pin bar as a reversal bar. Okay, let's pull this web. Okay, right here it's an example of price reaction. We got a support structure right here. We can see right from the left hand side right here, we got a strong bearish move from this structure right here, from this I continue having a low I swing, no bearish rally. Then we got reversal from this level right here due to the formation of bullish pin bar for a reversal. So these are one of the ways you can trade a bullish pin bar. You can see how this key level structure reacted in relation to the pin bar right there. You can see right there it's a mid line. This is a midline. This is the kind of key level structures reaction I said you should look out for whenever you want to trade the pin bars. You can see it's a midline. This is support structure right here. We got a midline right here. So this is nice entry right here that we can see that. So the pin bar as well can also serve as a continuation for an existing rally. Actually, this is a bullish rally right here. Okay, we got a continuation for this bullish rally right here. So let's study this action of price right here. So right here we can see we got a reaction at this level right here. So we can tag this level right here. Okay, just have this level right here. It's a resistance structure. When price, this is the highest swings right here. When price broke this resistance structure, we can see we got a resistance right here. So let's extend this level right here. We got a minor rejection structure right here. We got a resistance structure right here. It reverses price downward. Price broke this level right here. And then the broken resistance structure right here turned into a new support right here. We can see how price carved a bullish pin bar, now serving as a continuation of the bullish rally we got from this pin bar right here. You can see how it leads to the continuation of the bullish upward rally. You can see that. So the pin bar can as well serve for continuation of a rally. As well, it can lead to breakout of a pattern, breakout strategy. So I'm gonna show you an example of a breakout strategy. So let's check it out right here. Okay, I'm gonna put on a whiteboard right here. Actually, I showed you how you can use the bullish pin bar to trade for a bullish anticipation as well. I'm gonna show you how you can use the bearish pin bar to trade a bearish downward rally. So let's try and see if we can see a bullish. There's a bullish rally right here. Okay, let's put on a whiteboard right here so I quickly go through this. So on the bearish, okay, on a bullish rally like we did got right here, we got a resistance structure right here. Price made a pullback, price made a retest. If we have a bearish pin bar right here, this can lead to reversal of this bullish rally into a downward rally. This is a bearish pin bar at a resistance structure. Take note, if you want to take your pin bar as a reversal of a trend, make sure you figure out price have once tested a previous level, then you relate your pin bar to this previous level. This is what I mean by previous level. Right here is a resistance structure which was being rejected, which rejected price downwards. So if you want to take a kind of reversal whereby you figure out a bullish rally and then price carved a bearish pin bar like this, and then there is, okay, I'm gonna put this right here. If you have a kind of a bullish trend right here and then price carve a bearish pin bar like this, whereby you can figure out a previous level which is reacting to this point right here. You can figure out a previous point of reaction of a resistance structure, then it's advisable you do not take this pin bar right here for a bearish rally. You have to figure out there is a level whereby there is a past historical price action which is definitely giving us a signal this level is a potential level. Okay, so these are the kind of levels you should look up to. You can see on the chart which we got right here, on the chart of this British pound sterling right there, we once had a previous tested level right there. Price retested again, thereby validating this structure. So look out for a previous retested level before you can look out to initiate a pin bar, maybe for a reversal or for a continuation as well. But for continuation, not necessary all the time you got to look out for a once previous retested level, but you got to be very, very careful. For example, a pattern we got right here, you can see resistance right here, resistance right here, price reacted at this key level structure. So to summarize the pin bar trading strategy, you have to look out to be on the safer side. Look out, this key level structure is forming at a defined key level at a previous support or resistance structure. So when you look out for this pin bar at this level structure, you try to protect yourself against false move, okay, in the market. So I'm going to show you how you can implement this for pattern breakout. So let's say, for example, we got a symmetrical triangle right here and a price move within this symmetrical triangle. You can see price move right here, and then price moves up, and then the bar we got right here carves a bullish pin bar. The bar we got right there is serving as a breakout of pattern, because when price got right there, price made a pullback and the bull steps in and pull back price up, or thereby closing above this pattern right there. So this is a kind of breakout of pattern with a bullish pin bar. Likewise, you can have it in a bearish pattern. Not necessarily all pattern you got to have must be a symmetrical triangle. You can have maybe a rising narrow wedge. You can have a double top. So for example, if we got a double top right here, we got a neckline right here. Price can make a pullback up, Can see that this is a retest, a bearish pin bar, serving what as a continuation rally. This for a retest strategy. As well, you can have it in this way, whereby price is gonna move like this. Let's try this. Price makes a rally downward. Then price carves what? A bearish pin bar. Okay. So the pin bar, it's a very powerful price action bar. So as a beginner, I do advise stick to using the pin bar for continuation of a rally and therefore reversal of a trend. Once you can figure out, maybe for example, this kind of resistance structure we got right here. If a bearish pin bar formed right here, these are the kind of market you should trade, because there's a previous resistance structure right there. But in the kind of market whereby you can't figure out a previous resistance, try to avoid such rally. Okay, because price can make a pull down and then continue the rally. Okay, so that is how you can implement the pin bar to trade a reversal, to trade a continuation of a rally, likewise to trade or break out of a pattern. The breakout of a pattern of a pin bar is a complex or price action or strategy. So master the reversal and the continuation before you move on to the breakout strategy. Okay, so now the trade execution of a pin bar. This is about how you can initiate an entry, stop loss, and a take profit. So let's navigate back on the chart which we got right here. So for instance, if I want to take this trade right here, after I figure out price reacted at this support structure right here, and price carved this bar right here, the best zone I'm going to be willing to look out for trade opportunity right here is going to be at the structure right here. So I'm going to zoom in so you guys can figure out this properly. Can see that? So I'm going to be willing to execute an entry right here. Entry, stop loss right here. It can be some pips, like 5 or 10 pips away, because sometimes price is going to make a sharp pullback to retest this 50% Fibonacci of this layer of pin bar. So actually I love to initiate my stop loss at this level if I can figure out price reacting to this kind of level, because if price can make a pullback to this level, it means the signal right here, it's not active. It's not a false signal bar. So the best zone I want to implement my stop loss right here on this kind of market would be entry goes right here, stop loss goes right here. Then I'm going to be willing to target to risk reward ratio. That if this zone right here is 50 pips, then I'm going to be willing to target like 100 pips or target the next point close to resistance structure. So right here, the next structure we got right here is the structure swing low high right there. So I have two ways I can take this trade right here. My entry goes right here, my stop loss goes right here. I have to target to risk reward or ratio or the next level close to the low swings high right here. So these are the ways you can implement the pin bar for trade opportunity in the market. So I'm going to make a drain right here. There's a bullish pin bar. This is a bearish one. So we got this entry right here, stop loss right here, take profits to target, stop loss right here, entry right here, take profit to risk. So this is the way you can stop loss your entry, your TP, okay, can be close to the next resistance structure, but make sure you implement at least a 2 risk reward ratio. That is what I do advise traders. make sure you implement 2 risk reward ratio system. Okay, on the right here I got my stop loss right here. Stop loss goes right here based on the bearish pin bar. Entry goes right here, and then take profit right here. So this is how you can implement a trade based on the bullish pin bar for a bullish anticipation, and the bearish pin bar for a bearish no anticipation. Okay,